Good afternoon. I hope you're all having a great day. I want to say what a great event we're having so far. We have learned so much. Cybersecurity is so important. Access to fund, everything that we've learned so far. Childcare is such a big issue. And now we're going to hear a little bit about access to funding. If you own a small business, you understand that cash flow is key. And my name's Amy Henderson, and I work for Amarillo National Bank. I am a commercial lender. Amarillo National Bank is a community bank. We have locations, of course, in Amarillo, Texas, Lubbock, Austin, College Station, and San Antonio. So I'm happy to be here and happy to moderate this panel. And if you want to introduce yourself.
Hello. Can you all hear me? Yes. Oh, great. My name is Marchell Camp, and I am the CFO at LiftFund. LiftFund is a community development financial institution. So if you are just starting out your business or you are working on developing your history with your financials and your business and growing it, we're a great place to start. What we like to do is help you put together financial statements, business plans, those types of things, your first loan, and then hopefully you will move on to somebody else here on the panel after you get established and build your banking background.
Hello, my name is Annie Hudspeth, and I am with the U.S. Small Business Administration with the San Antonio District Office. And what our goal is to help individuals either start, grow, expand, or recover. And we do that through the 4 C's of the SBA. We have our capital program, which is our access to capital. We'll talk about a little bit more in detail. We also have our counseling partners to help businesses that need help with either a startup, maybe doing a business plan or projections or market research, and there is no cost to you. So we have our counseling side, and then we have our contracting. So if you wanted to do business with the government, and who doesn't, it is the world's largest purchaser. So we have contracting opportunities, and then we also have our crisis, which is our disaster loan programs. And I'll get into a little bit more on the SBA side and the loan programs that we do have available.
Hi, I'm Amy Joseph, and I work for Capital Certified Development Company, or Capital CDC for short. We facilitate the SBA 504 loan program. That's our flagship product. So we help small business owners finance commercial real estate and equipment to allow you guys to have own your own space instead of leasing and paying somebody rent every month. So we do that, and we also offer a smaller, it's called a community advantage loan. That's another SBA product that we can use to help. It's a smaller product, so it only goes up to $500,000, but we do some in the $50,000, $60,000 range, but can help finance working capital type items, inventory, improvements to your space. Even if you're leasing that space, that product will allow that. And we can do refinancing. Our rates are very attractive. They're much more attractive than what you're getting from bank rates right now. So we can, if somebody bought a building, say 5 years ago, and now your rate's adjusting and prime is higher than it was, we can look at helping you refinance and lower that payment back down.
So the one thing that ties us all together is a bank. And I would really encourage everyone to seek a community bank. Community bank prioritizes building strong relationships with their customers, often providing personalized assistance and tailored financial solutions, and they understand the regional marketplace. So a community bank in your community is very important. As a commercial lender, my job is to manage the risk of lending money. We're not lending my money or our money, we're lending our depositors' money. So when we lend out money, we're lending your money. So we want to make sure that we make good decisions. And then we, as a lender, we want to work with a team of people to help you be successful. Because if your business is successful, then we're successful. That means you're depositing more money in the bank. You may have other needs that we can help you with. So our job as a banker is help you to walk alongside of you and be successful. And then one of our first questions, which I'll start off with, is what are some tips you need to know before seeking out a loan from a lender? And then Natalie started out that conversation with the previous panel really well. As a lender, we want you to understand what your need is. What is your ask? Lenders want to know your business and what is your industry. We want you to be able to communicate how the business cash flow works. How will the loan be repaid, and what collateral is available to pledge, if any? For example, is the loan to manage cash flow or expand your business, purchase new equipment? Do you need leasehold improvements? A big red flag for me is when I have a customer come in and say, well, how much can I get? What do I qualify for? I really want to understand your business and your cash flow needs and how to tailor a loan for your needs. We will check your personal credit. We'll look at you personally and at your business bank statements. We want to make sure that there's enough cash to cover the repayment of the debt plus extra. We want to make sure that you keep cash in the business to cover those black swans, COVID, inflation, whatever gets thrown your way. We'll look at the business, and we're going to look at you, and we're going to look at you, the owner of the business globally. We want to make sure that there's enough cash that you're covered the home budget plus the business budget. We want to make sure that you understand your financials. We want to make sure that you know how your cash flow works. So when you come in and fill out an application, you have a conversation with me, I need to know quickly how all of this works. And then, collaterals usually last, but we want to tailor that loan to help you get that what you're seeking. And then that's when we bring these experts in with the different products. We want to work with the LiftFund or the SBA to get that loan that you're looking for. So with that, how does the LiftFund work with the bank when we have a customer that has a request?
Sure. So a lot of times we get referrals from banks because banks and credit unions are really, really important, but they have certain requirements that maybe not all businesses at the point that they're at qualify for. So we get a lot of referrals from banks and credit unions to work with small business owners. We have a little bit more flexibility in what we can consider collateral. We can help you put together financial statements, help you understand your cash flow. The things that we're going to be looking for, very similar. We need to understand how much you need, the use of those funds. What are you going to use it for? Not necessarily a 27-page business plan. It has its place, but for us, we want to understand how you're going to use those funds. We are going to check your credit. Do all of the normal things that you would do. We just have more flexibility. We loan from $500 to $5 million. So it is really what our love is microfinance. So the smaller loans, and that's where we would step in. So like I said, we want to help. We have technical assistance as well to help you understand, marketing, all of those types of things. We want to graduate you to the rest of this panel. So we're here to help you get started, understand what financially you're doing, hopefully get you your first loan. You start building that credit, you start building your business credit, and you move on to everybody here.
So at the SBA, we have our different loan programs that are available. We have our 7A product, which is our umbrella loan program. And under that has some specialized programs, such as the one that Amy mentioned, the Community Advantage. We also have the 504 program that Amy will talk to, and then we also have a new working capital pilot program. So that just kicked off on August 1st, 2024. So that's a brand new line of credit that just came out. We have had some lenders use the program. And it's becoming very successful. It could be either used for international or domestic, but it is a new program that came out. So we have term loans, we have lines of credit, we have trade finance. So if you're looking to move outside of the U.S. and look at the customer that resides outside of the U.S., we have some export trade programs that are also available. And so those are our different loan programs that we have. We also have our microloan, and we do the same anywhere from $500 to $5.5 million. Our guarantee percentage goes up to 90%. And what we are is a government guaranteed loan program. So you wouldn't come directly to the SBA. You would go to a credit union or the lender and go to them first. You would apply for the business loan. and they look to see if they could do it conventionally or on their own. And where the SBA comes in is kind of in that middle where they know where they can make the loan and they know where they cannot make the loan, so it's either a yes or a no. But with the SBA, we provide that middle area where they might be able to say yes. So we minimize that risk for the lender so it can turn their no into a yes, and that's how we help. So you don't come directly to the SBA to apply for the business loan, you will go to one of our partners to apply.
Yeah, I work with, so on the 504 program, it's a partnership program. So I can't do a loan without a bank, and a bank can't do a loan without a CDC. The easiest way I've found to explain why a CDC is involved and not the SBA directly is that the SBA is a government entity and they don't have a big enough budget to put boots on the ground across the country to facilitate a commercial loan program. So they outsource it to a CDC. So there's over 200 CDCs across the country. We can only do loans in the state that we're in or a state that touches us. So my company does loans in Texas, New Mexico, and Arkansas. So SBA does provide restrictions to keep us all honest, I guess, so to speak, but we do have to partner with a bank. So when a customer wants to do a commercial real estate project, they'll either go to the bank first, or some people come to me first. Either way is fine, but we do have to find that bank lending partner that's willing to do that first lien on the project. The theory is that that bank partner would be at a 50% loan to value, which means they should be able to give you better rate and terms if they're going to be at a lower loan to value than an 80% conventional loan. We come in and do up to 40% second lien. And that second lien that we do through the SBA is a 25-year fixed rate, and we're currently at 6.06 right now. So that's definitely below market compared to what you'll see out there. So yeah, we work with banks and credit unions, and our goal is to let small business owners come in with 10% down, as little as 10% down, get a long-term fixed rate loan that helps keep that working capital in your pocket that Amy mentioned earlier.
I've done several projects with a SBA 504 loan, and as a lender, we love them because we're in first lien position. We help the customer get into their owner-occupied building, and then they have a long-term fixed rate at their second lien. So it's a great way to get into that building. And then just recently, I learned too, Amy, that y'all do equipment financing also.
Yes, we can do equipment. Equipment loans are typically a 10-year term, also fixed. If it is, some equipment's really large and has longer useful life than 10 years, so if the manufacturer will say it's got a 20-year useful life or a 25-year useful life, we can take that out longer. We just have to get that verification from the manufacturer that it can last that long. But typically it's a 10-year note.
So Marcel, with newer businesses, can you explain how important cash flow is in running a business? And should you look at cash flow weekly?
Yes. So I'm going to answer this question both as a CPA and as a previous small business owner. Go into Excel, click on New, do a search for cash forecast. It's a template. It is so easy to use. It is the best thing that I did as a small business owner. I use it for LiftFund. I know exactly what our cash position is going to be for the next 12 months. And it's very simple. It has outflows and it has inflows. So very easy to use. You don't need to be a CPA to do it, but I guarantee you it is so much better than just not knowing. So yes, the answer is yes.
And then with the SBA and with LiftFund, how important is a credit score?
Well, for the SBA, we don't really look at a FICO score. What we have is what's called an SBSS score, and it's just a predictive scoring that's for that was made for the SBA, and so we do have a certain level of credit, and it's important to note that a lot of times individuals or business owners that come in for a business loan, they're surprised that they have to look at their personal credit. So SBA does require 20% guarantee from any owner or any borrower that's ownership is 20% or more of the business. So keep that in mind. That is something that is required under an SBA guarantee loan. And as far as the FICO score goes, we don't really set we don't set guidelines on the FICO score itself, but we do have that predictive risk rating that gives a rating to the applicant when they are applying for the loan. So it definitely is important for both your personal and business credit.
And then from a lender standpoint, why credit score is important so much, like I said before, it's about managing the risk. And if you have a business, you have cash flow, we're going to look at you individually as a business owner, because if you're a principal owner, which is 20% more, we're going to ask you to personally guarantee the loan. And what that means is that you're personally on the hook for the loan, even if you close down your business. So we want to make sure as a business owner that you're not in financial stress and is going to take cash from the business. So we're going to look at your personal cash flow. We're going to look at your personal financial statement. And so we're going to look at you very strongly because you're the owner. And then from there, we look at the cash flow of the business. So that's where we don't necessarily have a cutoff score because things happen in life. We want to be able to have you explain why there's a lot of medical charges on your credit report, or maybe there was a charge off and there may be something that we can overlook. We don't have some financial institutions do have a hard cutoff, but I tend to want to look at the whole holistic customer. With that, startup businesses. So I'm going to go to Marchell. So how do you prepare someone who wants to start a business?
Oh, there's a lot of things. So I think, and are you talking about just starting a business, period, or getting financing for a startup?
I think what's the first step? So you have this idea, you're passionate. How do you take that next step?
Sorry, I didn't know that was a question. Well, let's see. I mean, of course, register with the state of Texas and get yourself an FEIN with the federal government. I think it's not a bad idea. You can go online and download a standard business plan. It's not a bad idea to run through that and say, okay, this is my idea. Let me do some research on what market am I going to be in, those types of things. I think if you're going to for LiftFund, if you're a startup and you're coming to get funding, we're going to look at your experience in the field that your business is going to be in. We're going to be looking at, are you doing a personal investment into the business? We're going to be looking at your personal credit score, and of course, help you put together, or if you already have a business plan, we would need that as well. But, again, LiftFund is a little bit more flexible on the requirements, for any sort of loan, whether it's a startup or a regular one. So.
Well, then, question for Annie: does the SBA help with startup loans?
Yes, so what we do, as I mentioned, the 4 C's of the SBA when I first was introducing myself. So the second C that I mentioned was our counseling partners. Our counseling partners, we have the Small Business Development Center, we have the Veteran Business Outreach Center, and we have SCORE. And each of those centers, they're partially funded by the SBA, and they provide services at no cost to you. But they provide a valuable information to you and assistance. They can help you with those business plans. They can help you with the projections, your market research. They can help you with forecasting. They can help you whether you're starting a business or if you're looking to grow. And again, they have a network of a computer network that has so much information that can go by your industry standards and help you determine how many sandwiches you need to sell per day, or how many cups of coffee, and how many restaurants or same industries are in a certain mile radius of you. So it's very valuable information. So if you were coming to me and you were asking, what should I do as a startup business, those would be the resources that I would send you to, is to visit one of our resource partners. and help them, let them help you with writing your business plan and getting you completely bank ready. So when you are going in to visit with one of the lenders, you're going to have those projections. You're going to show your 36 months of projections. You're going to show your repayment ability, and you'll be able to go in and have everything that you need, maybe just a couple of more documents for the application. But that would be my recommendation if you came to me as a startup.
And I'm going to piggyback on what Annie said. The SBDC is going to be your best. SBDC, don't forget that acronym. The Small Business Development Center. I was like, what's the C for? Small Business Development Center. I recommend so many people to them. We will do startup projection-based commercial real estate loans. And if they have that business plan and those projections that have been vetted by the SBDC, that's like a third-party set of eyes verifying that what you came up with is reasonable and accurate. So SBA can't come back and say, oh no, we want a feasibility study, which are very expensive, by the way. So use your SBDC.
And from the bank's perspective, startups, like I said before, is about risk. And startup loans are typically higher risk. So we want you to seek out the LiftFund or the Small Business Development Center or the People Fund and get those resources first. You want to vet your business first before you go to the bank. We're the last place you go. You want to shop your business plan, and then you also want to shop your bank. Every commercial bank has different sectors that they really like to lend in because they feel like they're more experts in that area. So you want to, with that business plan, that opens those doors too to have those different conversations with different lenders, because ultimately you want to land where the best place is for the long-term relationship with your banker. And be expected to put some money down. Banks do not want to take 100% of the risk. They want what we call our customers to put some skin in the game. They want you to put some money into it with that. So be prepared with that. And that's where you may have this business plan and you know that you maybe have to put some cash into it, so you save up some money, or you pull out some investments. I heard people taking out their 401ks and doing everything you can to kind of shore up that risk. And I think our next question is, what is the difference between an SBA guaranteed loan and a SBA like 504 loan? What would be the differences?
Do you want me to take that?
The SBA 7A and then like a SBA 504.
Sure. I will start. I will start it. So the difference between a SBA 7A, so the 7A program, as I mentioned, is our umbrella program. You could use it for anything. It has any business, like if you wanted to use it for working capital, inventory, equipment, to purchase real estate, to do leasehold improvements. So pretty much any business need that you would need the money to that you're borrowing the money for, you would be able to do it. There's not really a lot of restrictions on the 7A program as far as the use of proceeds go. So that would be one of the major things. The second thing that's different, I would say, is that you're going to have one note, and you're going to be working with the participating lender, and you'll have that one note. The difference with the 504 is you're going to have two notes. You're going to have that first lien and the second lien. And then you'll have the restrictions on rather just for brick and mortar type things, for your real estate, if you're going to purchase real estate or construct new construction, or the heavy equipment that Amy mentioned. And I'll go a little bit more in detail on the 504, but those would be the biggest differences for the 7A versus the 504.
Yeah, I would just piggyback off that and say the 7A is done by a bank with their own money. And they get a guarantee from the SBA that says if you default, SBA is going to pay a big portion of it back, and the bank takes a smaller loss. So that enables them to do loans that are considered more risky than they would normally do. And then the 504, that's for the hard assets of a business. And so we have, there are SBA restrictions there that we have in place, but really the main difference is, are you buying real estate or are you not? Like Annie said, you can still use the 7A for real estate if you want to, but I think if you do your research, you'll find that the 504 for real estate just puts you in a much better interest rate position, because not all 7A loans are not all lenders will offer. Lenders have the ability to set the rate on a 7A loan since they're making their own money with some SBA guidelines, but they're probably not going to fix that for 25 years. And they're going to typically tie it to prime plus something. So prime is 8% right now. So you're probably going to be prime plus 1 or more. So that's the difference. I mentioned my rate was 6.06 because the SBA devised this program to be the hard asset financing mechanism for them. And that's why our rates are what they are.
So where would I go and find an SBA lender?
So here, no. So we do have something called Lender Match. So if you go to our website at sba.gov, you could find a list of our participating lenders. If we have a couple of different ways. The first one, as I mentioned, is our Lender Match. You can go in and answer a few questions, and it kind of does the same thing as if you're looking for a partner in Match.com or something.
It's a dating website.
It's a dating website for your to find a lender. But you'll go in, answer a few questions, and our lenders have gone in and answered a few questions. And if it matches them, then you'll get a list of lenders, and you can go through them, and you'll determine which one that you would like to do business with. And then it's referred to the lender. The lender will reach out to you, but you're in the driver's seat. You get to control which lender reaches out, and your information won't be provided to them until you said, yes, I want to work with them. So that's one way. The other way that we have is on our SBA.gov website. We have a list of 7A and 504 lenders, and you can find the ones that are maybe the top 10, the top 5, the top 20. So those 7A, 504 reports are on our website. And then, of course, lastly, if you do go to one of our counseling partners, they're going to be able to tell you which ones that they work the most with that might be specific to your industry. So those are just some of the different ways to find an SBA lender.
So we're going to open it up for questions, but before we do that, Marcel, what's the takeaway that you want people to have about LiftFund?
I think, number one, we're here for you. We have a lot of different programs. So we do 7A loans, we do 504 loans, we do, we have interest buy-down programs right now. The city of San Antonio just rolled one out, 0% interest for you, the business owner, if you qualify. So, there's always something at LiftFund. We have veteran loans, we have, all sorts of different things, first responder, different things like that. So I think the biggest takeaway is, CDFIs or community development financial institutions, just like People Fund, just like LiftFund, we're here to help you figure out and basically be able to hone in on what you need to grow, what you need to get the capital that you need, and then hopefully grow your business. So that is what LiftFund is here. We are a nonprofit. This is what we do. So we want you all to succeed, everybody here. So thank you.
Definitely. So do we have any questions out there? Yes, ma'am.
How does it work? Oh, hi.
Hi.
I'm Tiffany Smith. I'm the president and CEO of the Texas Kidney Foundation. And so I'm just trying to find out, how does this work for nonprofits? Because a lot of us lost 40% of our revenue when the pandemic hit, and we're still recovering from that. In our case, I have a wonderful husband, and we liquidated our 401k and did put some skin in the game to make sure that the foundation had what it needed. But how do you deal with nonprofits with this?
Well, I guess we didn't talk about eligibility at all, but for the SBA, for our eligibility requirements, you have to be owned and operated for profit and meet our size standard and reside in the U.S. So we don't have the programs for the nonprofit. Now, during COVID, we did have some programs that opened up, like our COVID Idol and some of those other programs that were available for small business owners for nonprofit. But as far as our permanent programs, we don't have anything for nonprofits. I don't know if LiftFund does.
I would still seek your small business development center. They can still you still need a business plan. You're still a business, even though your business is, you have a mission. And then with that business plan, you can still talk to your community bank. I do a lot of nonprofit lending. They still have to show cash flow. I still have to see how the loan's going to get paid back. It's just the dynamics of it are a little bit different, but the Small Business Development Center, that business plan is a great place to start, and then talk to your community banker, and they may be able to have some resources. I know in Amarillo, which I'm not familiar with this area, I'm so sorry, we have the Amarillo Area Foundation, which is a nonprofit organizations that help nonprofits, and so that may be something that you seek out in this area, is something similar to that.
I can speak from a nonprofit perspective. Become friends with all the bankers in your city, and get involved in your community, all of those things. I mean, LiftFund, I think my middle name is this, but I mean, that's what, you have to get the message out. You have to get, name recognition for your nonprofit, those types of things.
And there's a lot of grants out there. All the banks do need to give back. It's called a Community Reinvestment Act. As long as you have a good ask, that business plan kind of helps with that. You can ask banks because they have foundations and they have to give that money out. Very good question. Mm-hmm. Anyone else? Anybody want to ask what a line of credit is? Yeah. Well, thank you. Oh, yes, ma'am. Oh.
Sorry. If you're just starting out and you need funding, do you have to show the guarantee with personal finances?
We definitely want to look at your personal finances. When you're first starting, you want to surround yourself with some experts. You need to go find a good CPA, good bookkeeper, good insurance agent, especially with cyber insurance, and a good attorney. And so there's some soft expenses that you're going to have to spend money up, and then start separating. You want a personal checking account and a business checking account, mm-hmm. and run only your business through your business account. Don't run everything through your personal account. And so you want to start setting those separations up in the beginning. You want to go ahead and create either a DBA or a S Corp or LLC, and have that EIN number and start from the beginning from there.
Got it. Is there a recommended time frame that you have to be in business for in order to qualify?
So typically, every bank's different. So let me just start with there. Typically, I want to see you in business for 2 years, because statistically, the first 2 years is the hardest 2 years in your business, and the fail rate's higher. So we typically don't start lending to you until you've been in business for 2 years, but that's where the LiftFund and the People Fund come in. And they're a CDFI. And why I like CDFIs are they help you. I get to keep the banking relationship and develop that relationship with you. And then when you are bankable, when we can start lending to you, doing those lines of credit, we already have the relationship. You and I have already had coffee. You've already talked to me about what your challenges are and how successful you're being with the CDFIs. And then from there, we can get with the SBA or a 504 loan to help you with that next step. So that's where I just stress so much having a good relationship with your banker, even though they may say no at first, but if you have a good banker, they'll explain to you why and what you need to work on, because really we want to lend you money. We want to see that you're successful.
And Amy, if I can, that's one of the biggest reasons why a lender would use SBA is for the guarantee to help those small startups.
Definitely.
So the guarantee, SBA considers any business under 2 years as a startup. So there is opportunity out there through lenders, even if you are under 2 years. Now you might have to have an excellent credit score, have a secondary source of repayment, and something of that nature. But it is possible for startups to obtain financing with an SBA guarantee loan as well.
Thank you.
We have another question over here.
I did, actually. Many more years than I'd care to admit. So as a voice actor and a professional speaker, the good news is I don't need any money, but I actually still need an account, a banking account to run that business through, and I haven't established even the business name yet. But because those are two services, can I run them both under the same type of business account? And so that's question one. And then number two, regular bank or Navy Federal Credit Union. I'm a retired military. I don't know which is the best way to go. What's the question I need to go to my banker with?
That's a great question. I think you still probably want to talk to a bookkeeper or CPA because
I have one.
They can direct you what type of accounts and whether that's all under one EIN number or if it's two separate EIN numbers. And really, you want to look at a credit union and you want to look at the bank, you want to look at fees. Some credit unions do not do business checking accounts. That's where you may need a traditional bank. So you just have to do a little bit of research on that. But we want your money.
I don't need your money, though. That's the good news.
That's good.
I always like to say, don't pick your bank just on rate alone. There's so much more to it than that. There's so many other, prepayment penalty. You're going to be in this relationship. We joked about it being a dating website, but you're married. You're going to be married to this bank for, especially if you do a real estate loan, 25, maybe 30 years. So make sure is somebody you like and trust and feel good about working with.
Thank you.
We have one more question.
If you're doing a startup and you're gathering all this great information, and you're talking about personal line of credit, okay, duly noted, you got to work on that, you got to start putting money aside. When do you start your business line of credit? So should I go ahead and get a business account now and letting it start build its credit so that way when I do come to you guys, I already have a good business credit history?
That's a good question, and I'm not sure about the SBA or if you guys. We don't pull business credit reports. It's with my bank. It's all about the relationships. So we want to see that you've been a customer of ours and that you have money in the bank, and then you start building that relationship. Every lender's a little different. I think the SBA maybe does have a business credit score.
Yeah, that's the SBSS score that I was talking about. It takes the business. It's not a business credit score per se because there's a lot of different information that's combined to make one score. So there's your personal, your business, the terms that you used, if you've been delinquent. It's a bunch of different things that go into that number. So it's not specific to a business credit because it's a bunch of different things that spit out a number. So we really rely on our lenders and what the lender's policy is for their credit underwriting. We do have some minimal, what they can do and what they can't do or what they should do, but we do have a lot of information that says do what you do. Prudent lending services, treat our loans the same as you do your own. So we rely heavily on the lender to have those policies already in place. And so that's we don't really have a specific on that.
Well, and if you all have any more questions, I'll be at the networking event. If you want to ask me something personally or any of these ladies, please see us later, and we'd love to answer any questions that you have. So thank you for your time today.
Thank you.